terminology in the medieval ages about 1200, 1300 years ago, defining ribawi mal versus gair ribawi mal from the well-known six commodity hadith. And this nomenclature or the terminology is problematic in the contemporary environment. If you look at the hikmah rationale, as I talked about, what is the agency cost of debt? Agency cost of debt has two components. One is risk shifting. A, a borrower basically can, let me increase the size of this. Let me increase. A borrower, a borrower basically, somebody who buys a commodity or an asset like a house and takes a loan against it. So assume P is the value of the house, and the value fluctuates over time. It can go down from the initial value and then go up. In the long run, housing prices go up. They basically, housing is a good hedge against inflation. However, the loan value initially is Q0 and it declines over time. T is the maturity. So there can be times when the loan value intersects the asset value and the loan can be above the asset value. And when the loan gets above the asset value, people basically may default. It's called, when the loan is above the asset value, it's said the equity is underwater. So people can default on the loan, and that can basically makes the banking system or the ribawi loan system very fragile. And there is a deep reason why Allah subhanahu wa ta'ala has forbidden ribawi debt. So with risk shifting, a borrower can hurt a lender. When the borrower just defaults, it hurts the lender. And you see this time and again, you see this issue in banking crisis. Whenever there's a banking crisis, it's because of massive defaults and massive risk shifting. And there is another way where a lender can hurt a borrower, and this thing is through underinvestment. When the loan amount, when the loan obligation, the debt obligation goes above or is very close to the cash flows or the net operating income of the borrower, then what happens is the borrower cannot go ahead and invest in future growth assets, because the borrower basically will think that whenever he or she invest in further assets, the profits of that investment will be taken away by the lender. So the borrower is basically reluctant. And basically you see this issue is seen, you see this issue in the case of emerging economies, which have taken lots of debt. Look at some of these African countries or even some of the Muslim countries who have lots of external debt, let's say from the IMF or other places. And if they have external debt, then they cannot really come out of the debt. They are in a debt trap. And the same thing can be said for, currently a lot of countries are taking infrastructure loans from China, and my fear is, will these countries be in a debt trap? So coming back to the hikmah or the rationale way of thinking which we economists are accustomed to is very different from the illah or the effective cause which our esteemed ulama look into it. So, our expertise is very different. Our perspective is very different. So coming back, I told you the basics of this paper is the Quranic verse. Allah subhanahu wa ta'ala has permitted trade and forbidden ribawi transaction. So as I mentioned, trade is in the real sector, whereas riba is in the financial sector. We cannot work in the financial sector as it is quite integrated. However, our contemporary scholars have endorsed a buy and sell agreement in the financial rate with a profit rate which may be related with interest rates. The buy and sell agreement is called murabaha, and the following problems are found in contemporary murabaha. There is an ownership problem. Goods sold are not yet owned by the Islamic banks. Islamic banks operate in the financial sector, they do not operate in the real sector. And then there is a pricing problem, utilization of interest rate benchmark. The Islamic banks basically price the murabaha loans based on an index based on which is very much an index which is linked with interest rate. Now I'll give you an example of this. If people haven't understood this, I can give you another example. And the reason where I got this idea for this paper is from my father's example. My late father was a timber merchant. He used to sell wood, and those clients of his who who did not give him any headache, he used to sell on murabaha basis with very low imputed profit rate, And those client of his who gave him lots of headache, the pricing was very steep. So he based it. So this idea of this thing. So my father basically, when he was a timber merchant, he was working in the real sector of the economy. So trade is in the real sector, whereas banks are in the financial sector. Coming to the next slide is how do we relocate murabaha in the real sector of the economy? The classic murabaha, which is seen in the time of Rasul Sallallahu Alaihi Wasallam and the Salaf Salihin, is basically very much similar to trade credit. And do we see trade credit in the real world? Trade credit is there used by Amazon. Amazon is the best example how a company can use trade credit and become a success story. And it's not only Amazon's success, but it's also the success of the US. So Amazon basically uses 80 plus or minus, 80 days of account repayable and bestowing it with an overwhelming cash flow for investment in profitable projects. So Amazon basically takes the goods from various sellers and sells it, gets the cash, and then pays it to those sellers in 80 days. So it has a cash flow, it can invest that cash flows and benefit from it. And with lower financing costs, Amazon can deliver lower cost products or services to customers. And optimal trade credit basically enhances the efficiency of the financial system. Integrating it with Islamic values can help the development of Muslim economies, as stated by Blager. Blager, in one of his studies in Journal of Banking and Finance, says that countries with efficient financial system grow faster. So basically, coming back to the next slide. Methodology. We structured the murabaha in its historical context. The same context as done at the time of the Rasul Sallallahu Alaihi Wasallam, as well as the Salaf Salihin, as providing vendor financing in accordance with the economic intuition of facilitating trade. And what we do is we see a paper written by Rashid and Mitra in Financial Review, and we emulate the paper, we extend that paper to illustrate that the murabaha discount rate is lower than interest rates in periods of monetary tightening or financial crisis. Basically, what Rashid and Mitra did is they wrote a paper on trade credit, but they made several mistakes in that paper. So we correct the mistakes of Rashid and Mitra. And the idea here is also, as I give you an example of my late father, who was a timber merchant, who sold his the timber on credit. And I also have a personal example in this. Years ago, when I lived in New Jersey in the US, and I was working in New York City, I wanted to buy a car, and I went to a car dealer. And remember, the car dealer works in the real sector of the economy. And I was trying to lease a car, and I finally got car at maybe 4% leasing rate, and leasing rate was 4%, whereas the interest rate at that time in the US was like 10%. So car dealers can afford to price their product at a lower rate, because the car dealers are trying to sell their car. They are not trying to make money from financing rates. So and the car dealers are in the real sector of the economy. So coming back to going next slide, theoretical proposition, the intuition behind the approach, the best alternative is to is to basically define the classic murabaha facility as a trade credit in the real sector of the economy. This is similar to reinstating the original economic rationale in the medieval Islamic era as increasing the demand for goods sold on credit. So when somebody offers trade credit, it increases the demand for goods. As I mentioned to you, when I went to the Toyota dealer in New Jersey, I was trying to lease a car, and the Toyota dealer wanted to increase the demand for the cars the dealer had. So I got a very good financing leasing rate, for the car. And so if you offer a decent rate, and it helps complete the market also. To this end, we connect our model with the trade credit and price it using demand and supply of the same in our working capital setting. So going to the next slide, um, this diagram explains the way we are employing murabaha. We assume there is a firm zero, which is the supplier of goods, and then there are several buyers. The buyers can be end buyers. So the firm is selling the goods and to the buyers, and the buyers are paying after a certain time. And the buyers are firms. So this is like a trade credit. So this is a firm which is a seller of the good, intermediate goods, and these are the buyers of the good. So you know it, so coming back, the trade credit basically, the literature on trade credit says it's better than a bank. Trade credit is better than the bank at evaluating and enforcing its contract with its buyers. Typically, when the firm sells to buyers, the firm is in the same. The firm is in. Firm is able to evaluate the credit risk of the buyers, because the firm deals with the buyers time and time again. For a long time, firm zero has been dealing with the buyers, and it can eliminate, or it can alleviate, what you call adverse selection or information asymmetry, and it can enforce the contract. If the buyer does not pay, the firm can blacklist the buyer and report it to other similar sellers of the goods, and the other sellers will also blacklist the buyer. So the contract can be, and if the buyer defaults, the firm can take back the goods on default. So the firm, a trade credit is better than a bank in evaluating and enforcing the contract. Enforcing the contract. The firm can obtain information about its buyer promptly at a lower cost. This is better than a bank. The firm has the ability to resell the possessed assets at a at a lower cost to itself. Um, because if somebody defaults to a bank, the bank will take over the defaulted asset, but the bank is not in that same business as for the goods, and the bank will have problems disposing the assets. But here in trade credit, the ability to resell the repossessed good is not that bad. It can stabilize product demand in recessionary periods. The seller can price discriminate by the buyers based on their credit worthiness. I mentioned about my late father. My late father basically used to price discriminate. Those who give him lots of headache, basically he priced it at a higher price until they prove themselves. And it can enhance a long-term relationship with the buyers. Going to the next slide. So the theoretical model, we develop a model to evaluate the classic Murabaha discount rate. The classic Murabaha discount rate is, we call it as M, and we incorporate the price elasticities of the product of the respective firm, as well as that of the buyers. And our model is a single period model. The firm zero sells Q units of the product to several buyers. The firm buys faces a variable cost of V per dollar of sales and sells it at price P to the credit buyers at time N. A portion of the buyers decides to buy the goods on spot, while the 1 minus theta portion buys it on credit. That means theta is the portion which pays cash. When they're buying on the spot, they're paying cash, whereas 1 minus theta buys it on credit. Of the buyers who buy for credit, a portion W um, pays in one lump sum at time N, while the portion 1 minus W defaults. So we assume KS and KB as the opportunity cost of capital for the selling firm and the buying firm respectively. Modeling the supply side, which is the selling firm, the objective of the firm is to maximize its profits. It's just like similar to what we call in corporate finance, maximizing net present value. So this VS is theta, which is the fraction of the buyers which buy on cash, 1 minus theta buying on credit. So theta times P is the small p is the unit is basically is the is the price after the discount is the price after the discount times the Q units, and 1 minus theta is basically the fraction which buys on credit, and out of that W is the fraction which pays, and 1 minus W is the fraction which defaults, and then P is the credit price, and Q is the amount bought. Q is the quantity bought, and KS is the cost of capital of the selling firm, and this is the variable cost of the seller. So we try to optimize this, and we evaluate the first order necessary condition with respect to this discount, the cash discount alpha. As I mentioned to you, the cash discount is related with the Murabaha rate. The cash discount M is basically alpha divided by 1 minus alpha. We have derived it in the appendix. So we basically optimize this. We take the first derivative, and then we impose. We once we if after we differentiate, we get this one equation, huge equation, because there are number of dependent factors, and we call beta as the discount factor, which is 1 plus k raised to power 3 divided by 360, and this is a function of several partial derivatives. There's a partial derivatives of theta with respect to alpha s. There's a partial derivative of w with respect to alpha s, and there is a partial derivatives of Q with respect to alpha s. Then we incorporate several behavioral specifications. And behavioral specification is we got to assume a behavior, how theta as a function of alpha, W as a function of alpha, Q as a function of alpha. After we incorporate this, we get a quadratic equation. And we all know how to solve a quadratic equation. We studied solving a quadratic equation in high school. So once we do the quadratic equation, we find the roots, and we select only one root, and one root which is basically falling in the interval between 0, and it has to be less than 1. So we take this route. um, we take this route. This is the best root of the equation, and then we do similar things for the demand side. So as I mentioned to you, Rashid and Mitra basically do this side. They model the supply side, but they do not model demand side. And then Rashid and Mitra basically, after they solve it, they make this mistake. They assume the elasticity. This is the elasticity of supply. They make an error. They say it's an elasticity of demand. So this is the correction we do, and then this is how we extended Rashid and Mitra. We added the demand side, and this is the buying firm. The buying firm is also trying to optimize its net present value. So the buying firm, when the buying firm buys it buys it, it can value this good at a amount tau, which is greater than this, and the buying firm may, theta fraction of buying firm buys on cash, and then 1 minus theta buys it on credit, and W of it is the fraction paying on, paying, and 1 minus W is defaulting, so we don't have the defaulting one, and then this is PQ times beta, which is the discount rate. So here again we differentiate VB, the buyer, with respect to alpha of the buyer, the discount the buyer wants, and here again we get this big equation, and we incorporate the behavioral specification, and we get another quadratic equation, and we solve the quadratic equation, and then we superimpose basically, we superimpose market clearing conditions to these things. So coming back, before I go ahead, everybody, is this thing clear? I'm modeling the supply side, which is the selling firm. I'm modeling the demand side, which is the buying firm. And now we got to connect the buying side with the buying side with the selling side. So for markets to clear, the bid alpha, the bid alpha B and the ask alpha S prices of trade credit should equal with respective quantities bought on credit. So alpha S equals alpha B equals alpha. So we get common this thing, we connect the two equations, quadratic equation we have, and we get the unique alpha, which is the discount rate, and the discount rate is related with the Murabaha rate, which is evaluated in our appendix. So the key result we have is that the classic Murabaha discount rate is a function of not only the prevailing opportunity cost of capital of both the selling firm and the buying firm, but it also incorporates the price elasticity of the product. This has the potential to offer a Murabaha rate even lower than the opportunity cost of capital of not only financiers but also buyers. Since the elasticity of buyers are heterogeneous in the real world, this allows the selling firm to price discriminate their buyers. A classic Murabaha rate implies more efficiency and less expropriation in contrast to ribawi rates. So this is the key thing, that if you solve the equation, you get the Murabaha rate as being more efficient, better, lower than the opportunity cost of capital, which in the real world is basically the ribawi rate. So the Murabaha rate is lower. And we do this numerical simulation to illustrate this. So in this numerical simulation, we take what you call, um, we take KS equals KB equals 15%, and we take variable cost at 75%, T is 1, N is 90 days, and we take this gamma, we take several of these parameters in the model, and we solve for it, and we find that when elasticity is basically the supply elasticity in 2, and the what you call supply elasticity is 2, and the buyer elasticity is -2, the basically the discount rate is 11%, even though the opportunity cost of capital is 15%, and that gives the Murabaha rate as lower than 15%. And the same thing, we have very few examples where the Murabaha rate is higher than the opportunity cost of capital. But in the majority of the cases, we get Murabaha rates lower. And again, we showed this graphically also, that Murabaha rates can be lower than the ribawi rates. And this is like a static analysis we do. We vary, we change the elasticity of supply and elasticity of buyer, and we find this result. And very few cases we have my equals most of the cases we have in most of the cases we have rates which are lower than Murabaha rate is lower than the opportunity cost of capital. And again, here again, we do numerical simulation to illustrate this. But the key thing is, what does it mean? In the real world, you got to interpret what does it mean when you have Murabaha rates lower than this thing, does it basically help us? Does it help us? How does it help us? How does it help us get a real Islamic um, financial architecture? And the way we think about it is, how about if we have a universal Islamic banking? There are two types of banking system. One is the American type of system, which is basically a specialized banking system where you separate investment banks from basically investment banks are separate from retail banks. Retail banks deal with consumers, and investment banks deal with various companies. Investment retail banks can also deal with companies, but investment banks are much more sophisticated. However, Islamic universal banking system is found under two countries. One is in Germany as well as in Japan. And a universal Islamic banking architecture is like this. A universal Islamic bank can own shares with various companies, and the universal Islamic bank can have a board of seat in the firm's board of directors. And this firm, it has shares, sells it to buyers, and the buyers basically pay after a certain time limit, and the universal Islamic bank basically collects uh, the the promise of the buyer or the credit of the buyer over time, and the firm doesn't have to deal with it. The firm basically gives it its what you call um, the you know the firm doesn't have to factor it or discount it. The firm basically sells its receivables to gives its receivable to the Islamic bank. The Islamic bank collects the cash and shares the profit with the firm. So you can have various kinds of links with the universal bank, which can have with firm one to firm N, and basically it can be a pure equity link or it can be a quasi equity link. So universal Islamic bank architecture allows a financial intermediary to own an equity or a quasi-equity stake in a selling firm. This is very much consistent with with the spirit of Islam, because in the spirit of Islam, its risk sharing is allowed, and it endows resilience to the financial system. This implies that a real Islamic bank is like a mutual fund. The selling firm owned by the Universal Islamic Bank can sell its product on credit, employing the classic Murabaha facility to the buying firm in the real sector of the economy, and it remedies the chronic ownership and benchmark pricing problem of contemporary Murabaha. Please note, in the current Islamic banking system, the Islamic banks do not own the goods being sold. They have to buy it from somebody in the real sector. So here, this does away with the problem, and we don't have to depend on a ribawi interest rate. We can offer things lower than the ribawi interest rate. So conclusion, to move forward to improve the Islamic banking system, we propose a trade credit mechanism that revives the spirit of the classic Murabaha facility within the real sector of the economy. Our trade credit concept disengages the classic Murabaha facility from an interest-based index offering competitive rates, and is facilitated through a universal banking architecture. And I'm done with this. Tarima Kasi for attending this presentation. If there is any question, please feel free to ask. I'm open for questions.
Okay, thank you very much, Prof, for your enlightening presentation just now. So, dear participants, we just listened from professors that he found that the traditional murabaha is maybe more relevant and appropriate compared to the contemporary murabaha practices. And the real practice of Islamic bank, according to his presentation just now, should be based on the mutual fund. And the last one is that the Islamic banking should promote the idea of linking the transaction into the real sectors. Okay, Prof, by the way, how many minutes are you available, Prof, for the discussions?
We can go for till
Until
Maghrib time, before Maghrib. You have Maghrib coming up in 40 minutes, correct?
Okay, yeah, around 30 minutes. Okay, Prof.
30 minutes is fine, no problem.
Okay, Prof. Thank you. Okay, dear participants, maybe we open our discussions. Please, if you have questions, you can just unmute your account, and then I will call your name, and then you uh, take your question, give your question to the professors briefly, please. Any questions or any comments, feedbacks, please?
Please
Or
don't be shy.
okay, maybe for a while, meanwhile waiting for your comment, your questions. I hear from
Hello,
here
hello, doctor.
in the chat. Any questions?
Yeah, doctor. I,
Okay, please,
I've
please.
already unmuted my mic.
Okay, please mention your name, brother, and from which university are you coming from?
Okay, thank you so much. Thank you, Prof, for the wonderful presentation. We've learned a lot anyway within the short period of time. My name is Seku Gassama, a student of Ayalanga University, Surabaya, from the Gambia, West Africa. Prof, you've touched the length and the breadth of Islamic banking, which is very significant and is the area of interest of some of us who are part of this program. You've talked about, Western journals, discouraging or not kind of, accepting the Islamic papers more frequently, which is very, very important. And then you made a suggestion of Islamic countries to come together and then form a paper to encourage publications in the Islamic aspect of financial sector. I really, really, welcome that news, and then I think something will be done about it. In the midst of you guys, great people in the system. Basically, you talked about Muraba, and then you deal with more about the trading aspect of it. So can we use it in other sectors like in stock dealing in stock and stuff like that? How can we use Muraba? How can we model it in a way that in the Islamic world now we can do our trading in a more halal way than depending on the conventional system of banking or transactions. Yeah.
Look, the thing
Thank you.
is, this is a nice, very good question.
Yeah.
The issue is, um, one of the major problems we have. The one of the major problems we have in Islamic banking is the disconnect between. There is a disconnect or the rift between our way of thinking, which is basically hikmah from economic rationale, and our esteemed ulama who think in terms of illah. And because of that, we haven't gone ahead. And the illah is illah. I don't know, the ulama can get mad at me. Okay. The illah, the ijtihad that was done about 1200, 1300, 1400 years ago. And the Muslim Ummah is trapped in taqleed. I hope nobody gets upset at me. Taqleed is basically blind following of our respective schools. And because of this blind following, we haven't gone ahead. And in fact, Ibn Qayyim Rahmatullah alayhi talks about ijtihad being dynamic. And then there is one more person in the US. He's an Iraqi American brother, and he talks about. I'm forgetting his name. He talks about. He used to be the head of the um, American Journal for. He was the important guy in the American Journal for Islamic Social Sciences, and he talks about ijtihad being not only dynamic, but ijtihad being a joint ijtihad between the aimma and the specialist in the field, like the economist. So we haven't done that. And if you look at it, if our murabaha, we always think of Islamic banks as a murabaha, but we don't think there is an important thing here, which is the developed world has a very important part of its financial system, and we don't think about it. And that's the investment bank. Investment banks are really dynamic. the products they can create can be very much Sharia compliant. And we got to work. This paper is the beginning of basically how do you restructure the Islamic banking system. As I mentioned to you, Islamic banks basically are universal Islamic banks, should be universal. And this universal Islamic bank is a combination of not only an investment bank, but also a retail bank, a specialized banking system. So it's a combination. So you can do a lot of things, and even the facilities. It's not only trade credit which we create. It's a lot of facilities which can be created, can be quasi equity. And there is a deep meaning, deeper meaning of the Quranic verses. We need to think more deeply of the ribawi verses, which we haven't done that. So, we need to think about it very deeply. What is the meaning of the Quranic verse? And I was talking to a potential PhD candidate who was from Germany. He basically, we talked about it, and I mentioned to him that riba, when I look at riba, the verses of the Quran and the from the Hadith, to me, riba is basically a prohibition or an injunction to protect property rights. As an economist, I'm saying it riba protects property rights. And I'm saying to myself, and I'm saying to this prospective PhD student from Germany, who's basically of Turkish origin, I say, why didn't the Aimma talk about it? And I know the reason why our Aimma didn't talk about it, because for years and years, the Muslim world was ruled by autocrats. There were several sultans, and sultans took over people's property rights. They expropriated people's assets. So even the Quran talks about riba. Quran defines the attribute of riba as basically expropriating people's assets. And Ibn Qayyim talks about it. So I asked my student, this prospective student, how come, our scholars, because I know Ibn Qayyim talks about it, Ibn Taymiyyah talks about it, Ibn Rushd talks about it, but the remaining scholars. And then he told me, yes, some of the, since the student was Turkish, he told me, yes, some of the Hanafi scholars also talk about it, but the Muslim world was ruled by the sultans, and the sultans were expropriating assets. So, this is the thing. If the Muslim world wants to progress, we have to interpret riba in its proper context. We have to interpret gharar in its proper context. Basically, these injunctions, wherever Allah subhanahu wa ta'ala is giving us these injunctions, whether it's in the Quran or in the Sunnah, basically they imply property rights. We have to give property rights. Like for instance, when I am marking people's grades, I do not get my personal feelings about a student interfere with the grades. I have to do justice. I have to be fair. There are some times when I can be more generous in marking, but I don't go very strict also, most of the time. So I hope I've answered your question. But there is, what I'm trying to say is, the ijtihad has to be done. The ijtihad has to be dynamic, and the ijtihad has to be a joint ijtihad. It cannot be just one group of people who are trained in the fiqh, whose perspective is from a legal perspective looking at things. We have to admit the hikmah perspective and the illah. And we have to develop the Muslim world. Okay. I hope I've answered your question.
Okay, Prof.
Yeah, Prof.
Okay, brother. I think if you have any other questions, I can give the
no problem. No problem. I can give chance to others. No problem.
Yeah.
I have a follow-up question, but it's okay. Yeah.
Okay.
Thank you.
Brother. Thank you, brother. Okay. Any other question from the participants, please? Any other comments, feedback for other participants? Okay, if there is no any response, I just read here some question from the group chat. Prof, here we have a question from Brother Asnur concerning of may I get confirmation selling firm that you presented in your paper? It is referred to the share or stock or the firm acquisitions.
Can you repeat the question?
Here the question is, may I get confirmation selling firm? Because in the presentation slide, you mentioned about the selling firm. Is it referred to the shares or stock or the firms?
Look, let's say, let's give this thing, okay? Let's see this figure. Let's assume this is buyers are companies making cars. So this could be firm one, could be Toyota, firm two could be Ford, this could be Nissan, this could be General Motors, and let's say this firm is selling wiper blades. You know, on your car you have these wipers. If there's rains, the wipers basically, you know, so this firm could be like selling wipers to basically several buyers. So buyers can, you know, Toyota can have particular specification and the firm supplies to that. Okay. And so this is, there is no appreciation. Yes, the question you ask is important, and the question of appreciation comes when you are linking it with a universal Islamic bank to a firm for different firms. Here, the link can be either the universal Islamic banks own shares, so the shares of the various firms, or it owns quasi equity stake. Quasi equity stakes can be just can be having involved options in options in the appreciation of the firm, or can involve options in sharing the income of the firm. So you can tailor it, you know, you can, and quasi equity stake is allowed in Islam. Yeah, I have a paper on that, you know, so in the Arab Law Quarterly. So so basically, but the model I have is selling goods, intermediate goods. But in the real world, you can have the links which a universal Islamic bank has with various firms is basically an equity or a quasi equity link. Have I answered your question?
Okay, Prof. Thank you, Prof. Prof, you have any extra 10 minutes? Maybe I have existing issue here, Prof. Maybe I want to get your views concerning with the linking between real sectors and financial sectors. You said earlier that right now finance interest rate is the main reference for including Islamic banking to value the return of the products.
Yeah.
So here the issue is that how we value or get the return from the real sectors, bro. So we can compare and contrast then to what extent the benefits given through the real sectors compared to the financial sectors, because all of the activities in the Islamic banking and banking sectors referring to the interest rate and non real sectors return. What do you think, bro?
Look, this question is $1 million question. Okay, and before I, you hit the nail on the head, and let me go through something. I talk about this in my Islamic bank classes. Okay, so I'm going to present my lecture slides, and just be patient with me 1 minute. I'm just going to go to my lecture slide, and I'm going to share the screen with you on my lecture slide. And there is a verse of the Quran which our Aimma don't have not paid attention. Okay, and it has a separate meaning. Okay, and Can you see my slides now?
Yes.
Yes.
You can see my slides, correct? Now let me go to and when I start my slides on riba, I start it from Hashim Kamali's comment. Hashim Kamali says the position of the Sharia in the area of muamalat are predicted on the prevention of conflicts, exploitation, and injustice among people. They are not founded on devotional principle but on rational causes. And sometimes he says this is an important principle which is neglected by those who maintain that intellect and human reason have no place in the Sharia. So Kamali talks about this, but then when I talk about it, riba and let me go further ahead. Uh, the Quranic verse basically, okay, just give me 1 minute. Okay, look at the verse. This is the verse, Quranic verse. If the debtor is in difficulty, let him have respite until it is easier. But if you forego out of charity, it will be better for you if you realize. It says Surah Baqarah, excuse me, ayat number 280. And we have not paid attention to this verse. I'll explain to you what happened to me, how I understand this verse. In 1980, when I was doing my master's at the University of Pennsylvania, there was a major recession in the US. The American economy was in tantrums, The interest rates were like 20% in the US. And I was talking, and I was observing. There was an undergraduate student of mine. I was a tutor. I was a teaching assistant for a module, and there was an undergraduate student I was very friendly with. A guy called Solomon. And this guy Solomon came to me. He says, "Look, Shahid, I can tell you a stock. I can tell you a preferred stock, which is selling at the flat price of $2.5 a share." And it was the preferred stock of Chrysler Company. And Chrysler was in lots of trouble because interest rates were very high, businesses were down, Chrysler could not sell its cars. But fortunately for Chrysler, Chrysler had funded itself with preferred stock. So when Chrysler had difficulty, Chrysler was not forced to pay a dividend to the preferred stockholder, because preferred stocks have this facility that if the company is in difficulty, it does not have to pay dividend to its preferred stockholder. Of course, there is an implicit thing also here. If it doesn't pay to its preferred stockholder, it does not pay to its common stockholders too. It cannot pay to common stockholders and omit preferred stockholders, because preferred stockholders come before the common stockholders. And this made me realize that we have to think about the profile or what is the structure of a preferred stock. And there are preferred stock where basically companies do not pay dividends. And when they come out of the bad time, then they either continue their dividends, which they do, or they make up the missed dividend also, like the Quran is talking about. If you forego out of charity, it will be better for you. So this characteristics of preferred stock is what links a financial facility with the real sector. If it has to be linked with the real sector, and then it has to be linked with the performance of the firm. You have to go beyond the preferred stock, which we have not talked about. So there is need for, and then there is not only need for us doing joint ijtihad with the Aimma, but also there is need for people who have training in the Sharia to come and basically get trained in economics. So we can have basically what you said, we can cross fertilize. That's the word. You need cross-fertilization. At the end of the day, what matters is how do we develop our economies. We cannot be copycats. We cannot just copy things which are done in the West. So is this thing clear?
Yes, Prof. Thank you, Prof. Okay, dear participants, we have around 5 minutes left here before the Maghrib in our time. Is there any other comments, feedback, or question to the Prof, please? Okay, if there is no any questions, Prof, could you please just give us your advice or feedback or maybe suggestions how to advance our Islamic bank ahead, Prof?
I mean, look, the thing is, there are there are there are several things we need to do. We need to understand, if you do good research on Islamic banking system, if we need to progress, we need to understand one issue is institutional issues. Okay, one is institutional issue and the other one is the technical issue. So institutional issue is we got to understand the Quran and the Sunnah. There is no ifs and there is no buts. And how do we understand? And we have to link the Quran and the Sunnah with the current, in our, if we observe things, what is going on, and we modify things for us, typically companies, let's say your um, the Indonesian, what's the Indonesian? I'm forgetting Indonesian, the airlines. This thing. What's the name of that?
Indonesian Alliance?
Yeah, airline. I'm forgetting the name.
Garuda Indonesia.
Garuda. Let's say Garuda buys Boeing jets. When Garuda buys Boeing jets, Garuda will basically modify the Boeing jets in accordance with the climate in Indonesia, in accordance with many of its own specification, because things in Indonesia may be different from things in the US. So we have to modify, but we have to understand we have to integrate the Quran and the Sunnah with modern finance. And the Quran and the Sunnah, how do we do it? Okay, and I'm going to give you a hint. Just give me 1 minute. Can you see what I have in my hand?
I cannot see anything, Prof. Can you turn on your video, Prof? Could you please turn on your video, Prof?
Okay. I'm going to put the video on. Just give me 1 minute. Oh, is there? Okay, what I have in my hand is Tafsir ibn Kasir. And what we need to base, oh, sorry, yes, I got the video. Okay, can you see this?
Yes, sir, I can see it.
Okay, Tafsir ibn Kasir is one of the best tafsirs in the English language. And it has 10 volumes, okay? And it took me 7 years to go through Tafsir ibn Kasir. And when I go through it, I make my own notes. You see, I make my own notes, I mark it, and I have my own notebook, and I separate different sections. So it took me 7 years to go through this, and I'm going through it the second time, Tafsir ibn Kasir. And the second time, this is my 4th year, I'm on the 6th volume right now. So unless you read, and in Bahasa, you will have many different tafasirs. I mean, in my case, the language I'm very familiar is English. And my mother tongue is basically Urdu, basically, the closest language. But I cannot read Urdu because I didn't go to an Urdu school. I can speak a little bit of Urdu, but in Bahasa, you will, and I like Tafsir Ibn Kasir. Some people like my Arab friends like another tafsir, but I like Ibn Kasir because Ibn Kasir is basically a Shafi scholar, but he was a student of Ibn Qayyim, and you find, it's basically coming from the madhab of the hadith. So I'm very familiar, I'm very comfortable with either a Shafi or a Hanabila scholar, because it's very close to the madhab of the hadith, So to understand the institutional details, it's always good to have a good tafsir, whatever tafsir you have, Um, some of my friends, use, many people use the different tafsir. In the part of the world where I come from, they use, there are tafsirs by various different scholars, So, a good tafsir is important, and then learning the institution from what is happening in the current practice, learning that, and also keeping abreast of the markets. I mean, I spend a lot of time understanding what's going on in the financial markets. Years ago, I used to read both Financial Times as well as the Wall Street Journal. But right now, I just read the Financial Times because I don't have the time to go through the Wall Street Journal. So it's important to know this, and also knowing the finance literature. So and if and the thing is, you have to know, to learn the literature, you have to basically see see the issues in the literature, and if you can modify things, that will be better. you know so there's a long, and coming to this thing, and you have to constantly think about things. If you don't think about things, it will not work, because we always have to go advance our development. Have I answered your question?
Okay, Prof. Uh, I think we have almost reached our end, Prof. 5:23. So I think that we have got some information from your presentation, and very enlightening presentations. That your suggestion just now actually encourage us to further integrate our knowledge from basically from traditional perspective and modern perspective. And you just now also suggest that we have to also master not only in Islamic traditions, but also we have to be master in financial literatures.
Yeah.
So it must be an integration in terms of knowledge, so that we can address some technical issues, some financial issues, and in the end, we want to make our Islamic banking really Sharia based, not only Sharia compliant.
Brother Dimas, can you give me one more minute of your precious, couple of more minutes of your precious time?
Yes, please,
There,
Prof. Please,
there is
Prof.
one issue I haven't talked about. Okay. There is one issue I haven't talked about, and that issue is, how do we integrate our awqaf in the financial system? Awqaf will play a huge role. We have to integrate the awqaf, and awqaf being charitable organizations. Sometimes when we look at a project, whether a company looks at a project to take it or not to take it, the company will look at it whether the project is profitable or no. In the finance language, we talk about positive net present value. So the company will reject the project if it is not profitable. Now the thing is, the goal of awqaf is very different. Okay, let's see education. Okay, education, if it is a negative NPV or very low NPV, awqaf has to do it, because education can change the society. Okay, a hospital, if it is catering to the poor, may not be very profitable, but we need a hospital. Orphanages, we need orphanages. So there is we need to strengthen our awqaf. We need to modernize our awqaf. That's the need of the hour. And I was thinking about, I mean, I have this bad habit. When I'm eating my lunch or dinner, I go on YouTube and I listen to I look at several videos. And yesterday, when I was having my meals, I saw some video or YouTube video on something on Masjidul Nabwi. There was something which says in this COVID crisis, somebody removed the carpets on Masjidul Nabwi and found something. And what they found when they removed the carpets on Masjidul Nabwi, they found that there were wells which were there in outside. At the time of Rasul Sallallahu Alaihi Wasallam, there was wells outside Masjidul Nabwi, but Masjidul Nabwi, after it has expanded, it has incorporated those wells, and those wells were basically bought by several Sahabi, and who made it a waqf for the poor people to take the water. Even Usman radiallahu anhu, he had a big garden and he made it as a waqf. And the same thing was Abu Talha Ansari radiallahu anhu. He had a well which he put it in Awqaf, and it was Abu Talha radiallahu anhu's wells which came under Masjidul Nabwi, and they were covered by the carpets. So we have the history from our Salaf, that they established Awqaf. They gave something to society. So at the end of the day, we have to give something to society. you know and the thing is, there's one more thing. We cannot think ourselves as belonging to one race or a madhab. At the end of the day, we are Muslims. At the end of the day, let's say I'm going to think about myself. At the end of the day, our teacher is Rasul Sallallahu Alaihi Wasallam. And Rasul Sallallahu Alaihi Wasallam taught us to be better human being. And we have to be a better human being. I mean, I live in a small village in England, and there is no masjid in my village, unfortunately. The closest mosque I have is the campus mosque where I used to go, but the campus mosque has been closed. So I have to integrate myself in this society, and I have to be a good citizen of society. So and our teacher is Rasul Sallallahu Alaihi Wasallam. He's taught us to be a good human being. So that's all I have to say. Terima kasih for inviting me, and I'm grateful to your head of the department also, Brother Dimas. And one more thing, Brother Dimas, I'm grateful to you for your patience with me. I drove you crazy. I'm sorry about that. All right.
Okay, thank you very much, Prof. Shahid, from your precious time with us. Yeah, may Allah bless you, and may Allah always keep your health, yeah, and your family as well. And on the behalf of the Committee of International Training for Young Islamic Economic Leaders and the Department of Economics, Faculty of Economic and Business, Universitas Muhammad Jakarta, would like to express and extend our warm thanks and appreciation to your precious time with us. And inshallah, we are looking forward with you with another presentations and other discussions. And inshallah, hopefully next time you can go again to UMY. Yeah, we are waiting indeed your coming, Prof. Yeah. And also we are hoping that this pandemic will be end as soon as possible, so we can have a physical silaturahim, yeah, with you, inshallah.
Thank you for inviting me.
Thank you. And all dear participants, thank you very much for your all patience and participation on this first public lectures by our professors. And may you get some benefits and experience from him. And inshallah, I will ask his permission first, whether his slide can be circulated and distributed to you all, inshallah. Okay, Prof, that's all. Yes, Prof?
Brother Dimas, you can circulate the slides, but don't put it on any website because the paper is under review.
Okay.
Sometimes what happens is when papers are under review, if it goes to a referee who doesn't like me or doesn't like my student, they may not be intellectually honest,
Okay,
and
Prof.
get the paper. So,
okay, inshallah, Prof. Okay, thank you very much, Prof, and all participants. See you again tomorrow, inshallah, for our second public lectures by another speakers from central banks and also from other organizations or institutions. With that, let me end this forum by reciting Hamdalah together. Alhamdulillah. Thank you all. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, sir.
Thank you, Prof.
Thank you very much.
Thank you, Prof.
Terima kasih for inviting me. Okay, Assalamualaikum.
Thank you, Doctor. We appreciate
Sama-sama,
your
Prof.
time.
Anytime,
you.
anytime. Take care. Masalam.
Thank you, Prof.
مع السلامة دكتور.
Waalaikumsalam warahmatullah.